Hello, welcome. Today we'll be looking at 5 undervalued stocks for August 2024. Starting of course with United Parcel Service, ticker symbol UPS, which is in the shipping and delivery industry. Now this stock is down more than 30% in the past year, and it had a recent big decline because of their earnings. As you can see, in Q2 2024 it was trading at a PE ratio of 22 times. However, after this big drop in price, it is trading at a bigger discount than that valuation. But as we can see, it pays a very nice 5.06% dividend yield, but it has been growing at a very fast 3-year CAGR of 17.1%. Now the decrease in price mainly comes from a decrease in total revenue and gross profit than the previous quarters. However, when we look at net income, Q2 2024 was actually a pretty solid quarter for net income for UPS. And as we can see from the margin evolution, they all improved in this last quarter. However, they have been fairly stable over the past. Now, you do have to keep in mind that this company operates in a sector where margins are inherently low. Next, we can see that this company is doing okay at generating cash flows. The one thing that I'm not too happy about is that they are not extremely predictable. As we can see, in Q2 2023 was extremely small, in Q1 2024 was extremely large, and I prefer companies which have a very stable, predictable cash flow. However, when we look at their leverage evolution, this company is doing great as their total assets are way above their total liabilities, and they have kept this for a very long time. Now, stock number 2, ticker symbol EL, it is in the cosmetics industry and it is also down big in the past year, trading down by 44%, almost half in 1 year. Now we can see that this has mainly been caused to a drop in earnings because their valuation is still extremely high, with their price to earnings being close to 90 times in Q3 2024. However, when we look at their price to cash flow ratio, it is in a more solid place, trading at around 28 times. Now this company also has a very juicy dividend, which pays a 2.65% dividend yield, and this has grown at a 22.9% 3-year dividend CAGR, which is amazing. And when we look at the revenue and income evolution, they haven't been performing too bad. It is true that in the last quarter their revenues have shrunk, but their net income has actually come in higher than any of the past 4 quarters. And this, we can see from the margin evolution that their net margin has actually increased even after their operating margin decreased. Now when we look at cash flow evolution, we have the same issue where they're not actually predictable, and in some quarters they're actually generating negative free cash flow, which may be, for example, due to high capex. Now, when we look at their leverage evolution, I do like the fact that, first of all, their total assets and total liabilities are being reduced, because this is usually an indicator that they're improving their efficiency and improving their return on capital employed. And I also like the fact that their total assets are above their total liabilities. Now, company number 3 is Corsair, ticker symbol CRSR, and this is a company known for its gaming equipment. This stock is down more than 50% in the past year, and if we look even further back, it's even further down. Now this company, solid to note that it does not pay any dividends, and in the last quarter it actually had negative earnings, which is why we don't have a price to earnings ratio. Now I wouldn't look at price to earnings ratio to compare the price attractiveness for this company, as their earnings have always been extremely low and negative, which makes it a bit of an unreliable method. However, when we look at their price to cash flow ratio, it looks overvalued still in Q1 2024, which may be because they were investing back into the business and didn't generate such high free cash flow. And the fact is that when we look at the revenue and income evolution, it hasn't been doing the best. In the last quarter, revenue actually decreased from their highs of Q4 2023, their net income came in negative, and their gross profit was even lower. When we look at their margins, they have remained extremely stable, although very close to 0% in the case of net margin. Now, when we look at the cash flow evolution, I'm not a fan of this company, as the majority of the quarters it's actually returning negative free cash flow, and it is not generating predictable cash flows, which is the case for the companies that I like to invest in. However, when we look at the leverage evolution, we can also see that they're reducing their total assets and total liabilities, which is good, as they may be actually cutting down and focusing on more profitable parts of their business. And I do like the fact that their total assets are about 2 times their total liabilities. It may indicate that they're in a safe financial position. Company number 4 is none other than Ulta Beauty, ticker symbol Ulta, which is down 18% in the past year. And this company's stock price went over 550 in March of 2024, and now it's fallen way below that. When we look at their valuation ratios, this company seems like a very good deal. as in Q1 2024, their price to earnings ratio was around 15 times, and their price to cash flow ratio was even lower at a 14 times. Now, this company does not pay any dividends. However, when we look at their revenue and income evolution, we can see that it was positively trending until the latest Q1 2024, where revenue actually came in below what it did in Q4 2023. However, when we look at the margin evolution, we can see that the net margin has actually been improving every single quarter, something extremely positive for this company. One thing that I don't like about this company, again, is their free cash flows. They're not stable, they're not predictable. However, looking at the company's price right now, I believe that doing some more research on this company would not hurt anyone. Now, when we look at their total assets, again, they have decreased in Q1 2024, and I love the fact that they're still above their total liabilities by a very big margin. And last but not least, we'll be talking about Walt Disney Company, ticker symbol DIS, and although this is the only company that it is not at 52-week lows yet, it's getting there, and it only has around a 10% drop to get back to their 52-week lows. Now, this company stopped paying their dividends in 2020 after the pandemic, and I believe that in 2024 they're actually starting to resume that dividend, which is why it shows that they have a 0.33% dividend yield. Now, this is not a crazy dividend yield, but Disney was known to be a very solid dividend payer, so we may expect them to raise dividends in the future. Now, when we look at their valuation ratios, Q2 2024 was a quarter where they came in at very low earnings, which is where their valuation actually skyrocketed. But if we look at their price to cash flow ratio, it's in a more solid level, closing in at around 20-25 times. Now, when we look at the revenues, we can see that overall their revenue has been increasing. However, their net income decreased and the revenue also decreased in this latest quarter. But when we look at their margin evolution, we can see that the net margin is actually closing in on zero, which is not an improvement over the previous quarters, something not extremely positive. This company does provide a much more stable free cash flow than the other companies, and it is a lot more predictable. Although, right now they're investing heavily in their parks and attractions, and they're in a period of uncertainty where they don't know in which direction to push the company in. In terms of leverage, this company is also in a safe spot with their assets being above their total liabilities. And now, before moving on, please remember I'm not a financial advisor and this is not financial advice, so please do your own due diligence for these 5 companies. So thank you for watching. As always, this has been the Cashflow Compounder. Please join the Patreon for extra content, and there is a link in bio for a free stock if you join Trade Republic.